There's no guesswork involved there. I wasn't questioning whether I should keep the trade on, should I close it out, should I pay attention to what CNBC is saying, focus on the technicals on the chart. Allowed me to get out, book a $300 profit per contract, 67% return in and out. 2 to 20 days is a very typical holding time with how we approach markets. All right, hello again, everybody. This is Mike Rixey with NetPicks, and in today's video, I want to talk through why traditional option strategies just flat out are not working in this market over the past few weeks. We have seen a drastic shift away from the one-way grind higher that we saw most of last year, really the last number of years, to a return of big volatility, uncertainty being priced into the market for the first time in a long time. And what used to work really well is now underperforming. And I want to walk you through some tools that we're using right now to adapt to these changing conditions. Because bottom line is we don't know if markets are going to go back to the bull environment. Are we going to stay in this volatile environment in the months ahead? We don't know. You really want to make some adjustments now, expecting that the volatility is going to be here to stay. So let's talk through why things are not working as well as they were last year. If we go back to a daily chart of SPY, this is the S&P 500 ETF. If we go back to, let's just scroll back to what we were seeing last year. And I'll zoom out a little bit so we can see it a little bit easier. We had that one-way grind to the upside. Very few pullbacks during that stretch. Look at the sizes of the candles and then compare that to what we have seen over the past few weeks. The sizes of these daily candles, much, much larger. What used to take a matter of days or even weeks is now happening in a much shorter time frame. Everything is just speeding up. And if you're not careful, it's very easy to get chopped up in this environment, very easy to get stopped out too quickly, and then have the markets flip right back around in your favor. I've talked to a lot of people that just have had a hard time over the past few weeks trying to make sense of this environment. If we take that a step further, if we take a look at the VIX, let's just take a look at volatility in the overall market. I mean, just take a look at this daily chart. We saw in a whole extended stretch where we had the VIX pinned between 12 and 20. And now all of a sudden, we've got this large spike. We've had the last couple of weeks with the VIX well above 25. And we actually touched 60 here a few weeks ago. We're seeing volatility return for the first time in a long time. So when you take a look at the sizes of the daily candles on SPY, if you take a look at what's happened in volatility, it's no wonder why the strategies that you were using last year are not performing near as well. Last year, you just throw a dart at a dartboard, right? You just throw a dart at any stock and it was heading higher. It was a very forgiving environment. Even if you didn't have the timing quite right, just wait a couple of days, the market just would rally back to the upside and every dip was bought up. We're not seeing the same environment. And you can't expect what was working in that bull environment to work now with this type of environment. You really want to adjust and adapt and prepare yourself for an extended stretch of these types of conditions. So what can you do in this type of environment? Well, let's jump over. I'm going to take a look at our 195-minute chart. This is a chart of Apple. A big issue that's facing a lot of retail traders right now is just they don't have that disciplined system in place. If you turn on CNBC, Fox Business, Bloomberg, everybody has their opinion on what's going to happen next. You can't base your trading decisions off what the talking heads are saying, right? What financial media is going to say. You have to have a system in place that's going to stack the deck in your favor. That's going to put the numbers in your favor. We can't control the tariff headlines. We cannot control what the Fed does with interest rates. We can't control the inflation numbers. What we can control is staying disciplined to a trading system and controlling our risk. That's our full-time job as traders, controlling our risk, staying disciplined. But in order to stay disciplined, you have to have that system in place that you can trust. And what we focus on at NetPicks is we're focused on the technicals. We're focused on price action on the chart because we know over time there are very repeatable price patterns that you'll see on the charts. If I take a look at this chart of Apple, right, during this stretch, we have had Fed news. We have had tariff headlines. We've had Trump tweets. All of that's been priced in. If you take a look, if I filter out all that noise and just focus on what are the technicals telling me, if I take a look at this setup right here, we have our series of red dots. The beauty of our trade calculator, we have a very disciplined set of criteria that we look for on every trade that we take. That criteria guides our entry, our target, and our stop levels. We're not focused on the news. We're not focused on what the analysts are saying. We're saying, hey, what's the price action telling us to do? We had a bearish set a print for us on the chart, and we had this setup right here. Our first series of red dots, that was our entry point. We had our target levels down below, and we had our white dots up above. That's our stop level. So now before I ever get into a trade, I know exactly where my entry point's at, my target, my stop, my whole roadmap is outlined for me in real time. That gives me a rule set that I can stay disciplined to. Now, if I just come in and buy the outright 235 puts, I could have done that. $450 per contract gave me control of the downside on Apple. That put contract is going to increase in value as the stock moves lower. But we know it has. It did move to the downside. We did come down and hit our target right here. There was no guesswork involved there. I wasn't questioning whether I should keep the trade on. Should I close it out? Should I pay attention to what CNBC is saying? Absolutely not. I'm focused on the technicals on the chart. Allowed me to get out, book a $300 profit per contract, 67% return in and out. 2 to 20 days is a very typical holding time with how we approach markets. So now the guesswork's out of the equation. I stayed disciplined to my trade plan. The most I could have lost in this position was $450. Could I have taken the trade with multiple contracts? Sure. If you got a bigger account, nothing changes with this setup on the chart. If you're trading one contract, 10, 20 contracts, the trade is the same. You're just adjusting position size. Apple's a very liquid market. You can trade whatever size you want and not have any difficulty getting filled on these trades. So 67% return in and out in just about a week, fully risk-defined trade. That's why I love these types of strategies. In one of the most volatile environments we have seen in years, we're still able to book a really nice profit. Now, if you would have taken the long put, it's a great trade, great return. But what if you're one of those traders, I fall into this camp, what if you look at this chart and say, you know what, I'm a little unsure of what the market's doing. The system is giving me a setup. I've got to respect the system trade, but what if I want to cut back on my risk? What if I don't want to risk $450 per contract? Or what if I want a trade that's going to give me multiple ways of making money on the position? This long put position only had one way of making money. I was completely dependent on Apple moving to the downside. Thankfully it did. But what if it didn't? What if it did not make a big enough move? Or what if it wasn't a fast enough move? I would have lost money on that position. But what else could I have done? Here's where trading options is so important for me. And this is why I love this type of strategy. If I take a look at this bearish setup, the other way I could have taken this trade is to sell a call spread. All that means is I'm trading two options at the same time. We could have sold the 245, 247.5 call spread for $88 per spread, tying up $162 of our capital per spread. That's our max risk on the trade. I still want to know what my max risk is right up front, right? I want to know, if everything goes against me, I know that that trade is not going to wipe out my account. It's not going to leave me with a large drawdown. All this meant here in this case, I sold the 245 call. I bought the 247.5 call at the same time, trading two options at the same time. This trade gave me 5 ways of making money. Up, down, or sideways, I was okay in all three directional scenarios, as long as price stayed below 245. I also made money from time decay adding up and from volatility decreasing. Any combination of those 5 are going to help me. Did the stock move to the downside? It did. I was able to make money from the directional movement, but I also made money from the time decay adding up. Now I give myself multiple routes to follow to make money on this position. Most I could have lost, $162 per spread. Thankfully, that didn't come into play. We actually booked profit on this trade faster than the long puts. We closed out of our spread, booked a $44 profit per spread. That's a 27% return on my capital. In and out less than a week. Fully risk-defined trade that gave me 5 ways of making money on the position. Both are bearish positions. Both are bearish trades. Doesn't matter which one you take. It just depends on how aggressive you want to be. If you're more conservative, great. The call spread, you're still booking a 27% return in a matter of days. You want to be more aggressive? The long puts, 67% return. We bump it up a little bit, but we needed more to go right in our favor. Now I'm prepared for whatever the market throws my way. If I take a look at my portfolio right now, I have long calls and long puts. I've got some credit spreads on. That diversification has really helped. This is the same strategy that I'm using every day in my own trading. This is a strategy that I'm using that has helped book profits on 87 out of the last 95 trades that I've taken. 87 winners, 8 losses. Now, am I going to be able to maintain that pace? We're going to have losers along the way. That's part of trading. Past performance doesn't guarantee future success, but during those 90 plus trades, we've been in bullish markets, bearish markets, choppy markets, high volatility, low volatility. We're not dependent on one type of market. I'm setting myself up for future success because I'm taking what the market's giving me. I'm not forcing one strategy to work. I'm taking what the market's giving me, and that's going to improve my results long term. I'm not swinging for the fences. I'm looking for what's going to generate consistent returns for me over time in a multitude of market conditions on any market. This is Apple. The same strategy can be used on QQQ, SPY, Google, Amazon. It doesn't matter. So we would love to share with you more details on this strategy. If you have any questions, feel free to reach out. You can always post a comment here on the video, or you can reach out to info@netpicks.com. We'd love to connect. We're actually going to be holding a live webinar coming up next week where we're going to share in detail how the indicators work, what went into this setup, what made this a bearish setup. We're going to share all of that with you in real time. So go ahead and click on the link in the description of the video. We'll get you a spot reserved for the free training next week, and we'll get you set up for future success in this wild and crazy market. So I'm going to wrap this video up here. Thank you for your time, and we'll be back with you over the next few days with our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.